Hey everybody, my name is Brendan from StockStreams.com, and today I want to talk about the three stocks that I'm watching this week. Those three stocks are AMC stock, ticker symbol AMC, Plug Power stock, ticker symbol PLUG, and lastly Ethereum. So now let's get started. So here we are in AMC Stock Charts, and we can see that we have been on a very volatile, very wild, and very risky ride for the past week or so, up over 110% in about a week, but off about 20% from the highs that it made just Friday. So obviously the answer to why we're seeing this is because of the WallStreetBets crowd here. Here is a website that tracks the amount of mentions and the general sentiment on the comments of Reddit, and if we scroll down here, we can see that AMC is the most mentioned stock at the moment. So what that's telling me is that retail investor interest has popped up again. So high growth, high momentum names like GameStop or BlackBerry or Palantir may be something to watch, as they may begin to outperform again if this momentum continues. We can see here in AMC stock charts that this high momentum story is happening and is actually what some algorithms look for at when a stock is beginning to gain momentum. In the stock charts here, we can see a strong gap after the second day of good performance. We can see that the gap from the second candle to the third candle up here, this gap in between, is sometimes what technical analysts look for and what I call the FOMO gap, or the fear of missing out gap, which is mostly based on market psychology. What I'm trying to explain here is that after 2 days of seeing a stock rise up, after the second day is when people start paying attention to the move in the stock, and is when a lot of people begin asking themselves if they want to try their luck in the momentum game, because they are likely having a fear of missing out on the potential gains, hence the name FOMO gap. So we see this FOMO gap pattern here for the most recent momentum push that we just saw. But if we actually scroll back here and look at the initial burst of momentum, we see the same pattern of the FOMO gap. We see that after two strong sessions where the stock basically increased by 50%, a lot of people wanted in on the potential gains of AMC, and they had a fear of missing out. So because of that, on the third day, we see this ginormous spike up to the open. So again, this FOMO gap is never a guarantee that the momentum will continue to roll on like we saw here in AMC on the first momentum push or on the second momentum push up here. But it is something that some algorithms and some technical analysts do pay attention to, just to get a tip if there is a possible momentum play for a stock. So with that said, because of this, the first place where I would be looking to buy a momentum story like AMC is back from where we broke out of, around the $12 mark. Even better would be this strong support level down here around the $8 or $9 mark, and even better would be this support level down here around 5. But again, this is just a technical indicator here. In addition to technicals, we should also consider the fundamentals of the company, which we'll look at really quickly before talking about Plug Power stock. And when we look at the earnings report here for AMC, we can see here that the earnings report do not look too good here. Revenues are down year over year by over 84%. Also, we're still losing a lot of money on the net loss. For the most recent quarter, we are losing over $567 million. But again, do note this is much better than what we were losing this time last year, when we were losing over $2 billion for the quarter. So of course, this is due to the health crisis going on here, which explains these pretty bad numbers. However, there's actually some stuff that we need to think about the health crisis that actually did some good for AMC. Before the health crisis, we had a lot of smaller movie theater chains that were taking share away from AMC. However, it's likely that these smaller movie chains were unable to keep their doors open, and a lot of them went under, probably because they were unable to sell stocks or raise cash like AMC was able to. Because of that, AMC likely will come out with more market share than they had before, meaning that it actually might make more money in the future because they were able to outlive their competitors. But does that bull case explain why AMC rose 100% in a week? Absolutely not. The real story here, of course, as I've mentioned before, is the momentum. But keep in mind that momentum stocks are always risky. When the momentum leaves, investors should leave as well, so that they are not left holding the bag. So after talking about AMC, now let's talk about Plug Power. So here we are in Plug Power stock, and we can see that Plug Power has had a pretty good week, up about 10% in that week. So this is one of the areas that I was talking about in the first section of the video when I was saying that I was watching these momentum names this week because of what is happening with AMC. because Plug Power is also a momentum name, we might see some interesting price movement in the next few days, especially because our earnings report is supposed to be released next week according to NASDAQ on June 3rd. So that could definitely give some volatility to the name next week, and I'm watching the stock to see how the stock will react. But with all that said, if we look at the 6-month view of the chart here, we can see that we are a very long ways from our highs back here in January and February. When we look at the candlestick chart here, we can see that we basically fell from 70s up here all the way down to 20s down here in a straight line, and we can see that it looks like we broke that downtrend the past couple of days when we were able to trend upwards. However, right now it does look like we are at a resistance level around the $30 level, made from the tops and bottoms of these candles over here, as well as tops and bottoms of these candles over here. So I think this is why Plug Power's earnings report is something to watch, because if we get bad price action after the report, we could head all the way back down to the $20 level. However, if we get a good report and good price action, then we may be able to take out this $30 resistance level and plow our way up higher. So if you believe in the stock and you think that Plug Power can continue making partnerships and continue growing and the world can continue adopting hydrogen power, then I think that the first place where I would be looking to open up a position is again around this $23 support level over here, made from the bottoms of these candles over here. And if it continues going down to the $20 level, then I would probably fill out my position down here. I definitely think we could see $20 again, because if there is potential bad news with the earnings report, or also because interest rates are likely to rise again, that would be bad for high growth names such as Plug Power. But again, that's just a technical and a macro look at the story here. Considering the fundamentals of the business by looking at the earnings report is also important to do. And looking at the earnings report here, we see some interesting movement here. It's actually a little bit confusing, because if you look, we are actually reporting negative net revenues here. And honestly, having a negative net revenue does not make any sense at all. So what I had to do is I had to dig through the report here to see why we're getting negative revenues. And if we look, this is all explained because the company needed to bill the accelerated vesting of customer warrants. So because of this, this leads to the company having to build this on the revenue section of the earnings report, so we get these funny negative numbers here. But what that actually does is that it's really hard for somebody like me to really get a gauge on how the business is going, because how they build it is really muddying up the numbers. So basically, if we scroll down here, one of the only things I can get a clearer picture on is the operating expenses down here, because that is not muddied by our revenue numbers. And we can see that year over year, we are more than doubling our operating expenses. And honestly, that's not really what I would like to see. But it is understandable because the company is still starting out and it is trying to grow. So you gotta spend money to grow. But the last point I want to make here on the earnings report is the share dilution. If we scroll down here to the weighted average number of common stock, we can see that we are more than doubling the company's float from 260 billion shares to 425 billion shares. So what that means is that it's really bad for shareholders of the company, because that means that we're doubling the amount of shares in circulation, and that's not good as an investor, because that means that your share of the company pie is basically cut in half. So again, this is kind of a risky, momentum-driven name with not the best fundamentals at the moment, but it could go sky high if investors continue pushing high momentum names like AMC. So investors really need to consider the macro environment with what's happening with AMC, but also combined with what's happening with higher interest rates, which could be a downside risk for the stock, but also the green energy movement, which could be an upside risk for the stock. So after talking about Plug Power, now let's talk about Ethereum. So the last thing that I'm watching this week is Ethereum, one of the alternative cryptocurrencies to Bitcoin. And it's actually one that I think is a bit more interesting than Bitcoin right now. As I mentioned in some previous videos, the cryptos have been on a very volatile ride the past week or so, especially on weekends. And that is why I'm paying particular attention this weekend, as it is a 3-day weekend here in the United States. The reason why I think Ethereum may be a little bit more interesting than Bitcoin at the moment is because the blockchain that Ethereum is built on is also one that is being used for the NFTs. This is why a ton of websites that are selling NFTs are accepting primarily Ethereum. And because you can actually buy stuff with Ethereum right now, not to mention that something useful is actually driving traffic to the Ethereum blockchain, which is why I think Ethereum could have as much or greater upside than Bitcoin, not only for the price, but also for the general adoption of the use case. So moving on to Ethereum's trading charts here, the first place where I'm looking to add parts of Ethereum to my portfolio is down here around the $1,900 level. We can see that this is actually a pretty strong support level made from the bottoms of these candles over here, the tops of these candles over here, and also splitting the difference between these two very strong down days here. But again, if we look, we are in a pretty well-defined and very steep downtrend here. I would not be surprised if we break this $1,900 support level and move back down all the way to the $1,500 level down here, which is a support level made from these candles over here. Or if we zoom out here, I would not be surprised if we hit the $1,200 support level made from the bottoms of these candles over here. Again, as always, crypto is quite risky because the inherent value is not quite clear. And as we can see here, the potential to lose a lot of percentage points in a short amount of time is quite great. If someone wants to invest in crypto, they need to understand how risky it is and be prepared to lose what they put in. They should be comfortable seeing Ethereum drop from the 4,000 levels to the 2,000 levels. But for me, I am convinced with the long-term story of crypto. I do see a future where NFTs or non-fungible tokens are more widespread and more accepted, and where cryptos can play a role in an individual or institutional portfolio. There are a lot of macro headwinds for crypto, such as government entities banning cryptocurrencies, which I explained in my previous crypto videos, and that is something that you need to consider because that could definitely have a negative impact on the stock. But for me, after weighing the potential risks and potential rewards, I am all right taking on this pretty large risk right now for the potential for rewards years from now.